The second biggest bank collapse in U.S. history.
Okay, so we've all heard about the big bank crash that happened a few weeks. As a storm of events came together, all of us kind of freaked out and we ran to the banks to take our money out. That was scary. But the scariest part is that may be, and the reason for what's coming that no one is talking about is commercial real estate. In this video, we're gonna explain what may cause the next crash and what it means for me and you, and who will sadly be taking massive losses.
The people who earn too much money.
Real estate, what is it? Basically property used for business purposes rather than living. Think offices, industrial units, rentals, not your apartment. And something dangerous lies in wait there. Up each year. The Fed started raising interest rates aggressively because inflation, it's almost at all-time highs. And high inflation is bad. I mean, really bad. So when rates go up, the idea is it tamps down on spending, and because people spend less, thus theoretically, inflation comes down. There are side effects, bad ones, like asset prices, aka the cost of hard things like real estate, fall faster than a girl at Coachella when she sees a VIP bag. Real estate could fall that fast, as much as 40%. That means that if you had $1 invested, you now only have 60 cents overnight. And that might be why small and medium banks are essentially running out of money. Powell of the Fed says that we literally only want to put in banks that the government could bail out. The market actually gets more risky because now fewer banks hold all the cash, and JP Morgan is one of the winners. Do the words too big to fail ring a bell? The money spigot has shut off. Money then floods to safety, and more interest rate loan extensions from big banks are mandated. You might say, that's not that big of a deal. We still have 60%. In 2008, the housing market fell 20%. So 2023 to 2025 could be 2 times as bad as 2008. But why is this important and how big is this? Commercial real estate makes startup bank loans, aka SVB, look like a gnat biting at a giant. Commercial real estate is a $20 trillion sector globally, with more than $1 trillion market in the US. We're talking about giant size losses. But what's that mean for us, the normal people? Well, right before our eyes, the perfect storm is playing out again.
God damn it.
Huge market, 70 to 80% of commercial real estate loans come from small and medium banks, the same ones experiencing those runs. The extra hard problem with that is commercial real estate loans not liquid, aka easy to sell. If these loans start getting marked down to 40%, you have a mass liquidation event, or a bunch of people going bankrupt. And a bunch of the smart guys all over the world think that's gonna happen sooner than we're ready for it. So what happens when that fall begins? There's always somebody holding the bag. Let's call them the bag man. So who owns all these loans in commercial real estate? 2 words: shadow banks. Shadow banks are basically entities that do bank-like activities, aka lend